Now, the essence of profitable trading, whether it's profitable Betfair trading, betting, any trading of any sort or anything that you choose to speculate on, it's to have a positive expectancy. And that means basically winning more than you lose when you actively trade. A little bit more complicated than that. But in essence, you're looking for those sort of positions within the market. So how would you like to find a position in the market that has a roughly 2-to-1 payoff? By default. That's what we're going to explore in this video, and we're going to look at a trade that I did that exploited this characteristic. If you're interested in learning to trade on Betfair, then visit the BetAngel Academy, where you have detailed structured Betfair trading courses. And don't forget to subscribe to our YouTube channel and click on the bell icon if you want notification of new videos as they're released. So if you want to be long-term profitable, you need to find a position in the market that will win more than you lose. It's a little bit more complicated than that. I have done a video on this talking about strike rates, how much you win when you win, how much you lose, and all of those things, and how they all work together. But fundamentally speaking, if we assume that you've got an equal number of positive and negative trades, then the only way that you'll get positive is to make sure that you win more than you lose, or you lose less than you win. You've got to be one of those two things around, foregoing strike rate and all of those other elements. If you want to learn about the real detail, I have done a long video explaining it, which I will sort of bring up in the middle of this one and tag on the end. But fundamentally, if we look at this from a market trading perspective, I'm always looking for positions within the market that allow me to get much closer to that particular goal. You want to find positions where the threat of a loss is much lower than the potential payoff, or you want to find positions where you sort of put yourself roughly in the right place. So from, if we're talking about horse racing on Betfair and trading horse racing, imagine you've got a traded range that's sort of this big, and you're at the bottom end of that traded range, and you can see a number of reasons that you don't think that the price is going to go much lower. Then basically you can take a position, so you could lay at the low end of the traded range on the ladder and hope that the price starts to head back up in the other direction. And if it doesn't, then it probably doesn't have that far to fall because there's some fundamental sort of barrier stopping it from there. And it could be that you're doing this the other way around as well. So say we're at the top end of a traded range and you can see a number of reasons why it won't go that much higher. Then basically you would back it in the hope that the price comes down, but there would sort of be a potential limit on how far it would go above there. If you're in the middle of a trading range, you could sort of say that, your potential profit is equidistant. It could be, a positive or a minus, but essentially when you're actively trading, you're looking for positions where you're minimizing the amount of downside that you've got, and you're looking to gain as much upside as you possibly can. So as well as having your trading fundamentals within whatever you're attempting to do, you're in essence trying to find those sort of positions within the market. And the interesting thing about trading and horse racing, we know that it's purely driven by opinion. There's nothing that will fundamentally, or generally nothing that will fundamentally alter that characteristic. So the market sort of meanders around all over the place, and you're trying to spot positions within the market that give you the ability to put yourself in a better position to profit. And there is one situation within the market that occurs on a regular basis that I'm actively seeking. You may have found this or seen me do this in a number of videos in the past. If you go onto the Academy site or you watch some of my YouTube videos, there are about 4 hours worth of me trading there, and you will see this cropping up as a theme throughout those videos. I'm not sure if I mention it specifically or not in some of the videos, but you will be able to see it having watched this one. So go back and watch some of those, or visit the Academy where we've put them all together, and you will see me trading off of this particular point within the market. What is this point within the market? Well, it's a crossover point, and the crossover point has a curious background to it because it was something that I discovered very early on within my trading career, and I actually came up with the name of crossover. And if you're interested in the background as to where that name came from, I've done a video on that too. And it's funny how something that I called just a standard name all of that time ago has gone on to gain wider acceptance, and it's considered a key part within the market itself. But there's always a little bit more detail that sort of sits behind it. But fundamentally speaking, if you look at a crossover point, it's the point within the market where the odds increment changes. What do I mean by that? Well, if you look at the market when it's centered around odds of 2, if you go to the BetAngel ladder, you will see that we've actually highlighted it in a different color. And that is to indicate that you're approaching a crossover point. And the key fact to know about crossover points is that as the price rises above it, the odds increments changes. And for example, at odds of 2, it changes at 2% increments and it goes down at 1% increments. So if you're laying in the market at that particular moment in time, every time you go up one tick, you get a 2% payoff. And if the position goes against you, you get a 1% loss. So it's 2 to 1 in your favor. That sounds good, doesn't it? If you do something at odds of 3, you'll see the crossover point there, and it goes up by 5% and down by 2. So it's 2.5 times in your favor. And if you go to odds of 4, then you will find it goes up 10% and down 5. At odds of 6, it goes up 20% and down 10%. So crossover points are an area within the market where if you're using level stakes, you will actually get a payoff if you're actively laying and the price is drifting of 2 to 1 in your favor. So it's a nice little point to be within the market. Now, the important thing to remember is if you're trading completely at random, then you're going to get random results. So ideally, you're looking for scenarios and setups near crossover points that are likely to push through that point and head higher. In other words, you're looking for a drift within the market. So it's critically important that you don't just jump on every crossover point, because if the price is rocketing in, just your desire to find a crossover point won't overrule the fact that the price is crashing in. So you're looking for weak runners within the market that are approaching this critical point within the market. And the way that I suggest you use it is when you're actually looking at the market itself, you're basically saying, I'm looking for a weak horse, a horse that's drifting, and ideally it will be near a crossover point. So if you have two potential trades that you could do, but one is near a crossover point, then you'll probably go for the one near the crossover point, because it's just got a few more things stacked in its favor. Whereas the one that's in the middle of nowhere probably isn't as beneficial to you, and you may be taking slightly more risk. Of course, it all comes down to you as a trader and what sort of level of risk you want and what you're looking for. But essentially, you're looking for something that you can lay first, in other words, a drifting horse that's near this critical point to be able to stack things in your favor. So with that in mind, let's have a look at a trade that I captured for you to illustrate this exact point. So let's set up this trade for you here. We're trying to get in at the crossover point. We actually miss it slightly. We jump in at 4.1. But basically the reason that we're doing this is because the favourite's on a slight drift. It's sort of reached a low of 3.5, just under in fact, nearly 325, and it's been gradually drifting out from there. Ideally, we would like to see some support from the other runners. We're not really seeing that much support from those runners in this market, but they're certainly not drifting, so that does lend a bit of support to the favourite, just not a great deal. However, we're sort of reasonably confident that we can expect this favourite to sort of drift out a little bit, but even if it doesn't go by much, everything's very much stacked in our favour. If you look at 4.1, you can see we break even. If you look at the left hand side column on the ladder, you can see that's a break even point. And if we count down 5 ticks, so if we go down 1, 2, 3, 4, 5, that takes us to 3.8. We would lose £150 if it goes down to 3.8. Now let's count up 5. 1, 2, 3, 4, 5. You can see at 4.6 we would make £250. And at the very top there you can see at 4.9 we would make £400. And to lose £400 in the other direction, we'd have to go all the way back down to odds of 3.3, which is the lowest that it has traded at. So you'd think it's unlikely that it would get all the way down to 3.3, but it stands a chance of getting to 4.9. But that's essentially how we've set up this particular trade. So we've initiated our trade here. You can see all the potential losses below us and all of the potential profits above us. It looks a bit uneven actually, so let's correct that. But we're basically trying to work out where we think this could end within this range. It's traded low as 3.3 and it's traded a little bit higher. But we're going to trade it within a range defined between about 4 and 5. So you'll see me put orders in within that particular range. Now when I do this, I'm sort of pitching the orders where I think it could go. But I'm not saying that it definitely is going to go there. I'm just putting them in place so that they get matched quickly when they arrive at that particular point. So it would be nice if it went all the way up to 5, but I'm not necessarily saying that that's going to happen. But because we've got a little bit of a move already, you can see that the market sort of bumped up to about just over 4.5 and then sort of stalled at that particular point. So I've pitched a few orders in at that particular level, and what I'm trying to do is reduce my net stake, and therefore you can see me just cancel those orders off so that my net stake equals the amount of orders that I've got left in the market. That's how I'm managing the trade. Very often, you know, I don't know how far it's going to reach, but I'm putting the trades there in the anticipation that the price will wobble around a bit. And you can see what I do is I cancel some orders at the top and put them in at the bottom so that I keep the trade in balance. In other words, when all those trades that you see on the screen have been matched, then I know that I'm out of my position. And then it's just a question of sitting and waiting for the trade to complete. Now you can see here that the drift isn't occurring, and we are getting closer to post. This trade I'm doing quite close to post time. So I'm just basically pulling those trades down and trying to get them filled in a reasonable manner and making sure that they do. But you can notice now, if you look at the left hand side column on the ladder, you can see the green space is way off the bottom here. So the only way we could possibly lose money here is if the price sort of headed down to that level. If you rewind and watch this video again, you'll see that sort of green space growing as I slowly exit little bits of positions. So I go in with a decent stake, put a number of closing positions above it, and then amend those closing positions as the market begins to develop. And in fact, what you're seeing here is we've more or less ended up back at exactly the same place that we did before, but we've still been able to make money. So the interesting thing about this trade is we turned up to this market, we found something that was near the crossover point, and it was on a gentle drift, which was perfect for what we wanted to do. And you can see that we took advantage of the crossover point, and you can also see the impact that it had on our potential trade. If the price moved up a little bit, there was plenty of potential profit for us there. But if the price started to move back in the other direction, we were limiting our losses. And the interesting thing overall about this trade is, in fact, the price did drift. It went up a little bit higher, and then in fact it just sort of ran out of steam and came back, and it pretty much ended up exactly where you started. But you can see that even though the trade itself ended up at exactly the same place at which we entered, because we were actively trading it in the way a real trader would trade it, we took advantage of the crossover point, but we also took advantage of that little bit of volatility that we saw within the market to net a profit. If you talk to a lot of people, they say, well, the market's efficient, and between these 2 points, you can see that the price didn't move, which is exactly true. But look what happened in the interim. We were able to make a profit on this market. We're able to stack all of the risk in our favour, and we were able to make a half decent profit on the stake that we were using to be able to trade this market to a profit regardless of who went on to win this race. And in essence, what you've seen here is a nice little trade. The setup was good. We used the right strategy. We did the right things. And we ended up with a half decent profit as well. Now all you need to do is repeat that over a number of markets, and then you'll end up with a decent amount over the course of a week, a month, a year, or however. And ultimately that's your role as a trader. Find those key points within the market, trade them effectively, don't get over ambitious, and just stick to the basics. If you can find markets that exhibit decent opportunities to trade and you execute the trade well, then there's no reason why you shouldn't be able to profit from it.